So, am I going to lose everything? Probably not, but that's what most people think when they think of options trading. The risk, because you can lose 100% of your investment, scares a lot of people away. And so I want to dive in, explore some of those details, and see how we might be able to use options as a tool to maximize our portfolio. What are options to start with? So we talked a bit about this in the optionality video, but put simply, options are a financial tool that allow you to buy or sell the future of an asset by making bets about the future price of the current shares that you hold of that asset, or that someone else holds. The seller of the options wants to cash in on the future potential to earn short-term gains right now. And the buyer wants to capture that future potential in exchange for the money that they currently have. So options are inherently risky, and that's, you lose 100% if you are wrong, and the future is uncertain, so you never know if you're going to be wrong. There's always a chance, and so that scares a lot of people. The benefit of options, though, is that the value, if you are right, often exceeds many times over the value of the investment. So rather than risking $100 for a share of a stock that might increase 30% over the next year, if I risk that same $100 seeking a 1,000% increase following that exact same trend, that's very doable with options. And those returns mean that dollar for dollar, I'm maximizing the efficiency of my dollars. So if we enter this realm knowing that, hey, these assets are highly risky, and then we start to build a framework around that risk, then basically options boil down to a few key concepts. And some of these are covered by the Greeks, gamma, delta, theta, rho, vega, etc. I don't bother with the Greeks. Leave them in Greece for now. We don't need them. In my experience, you need to know 5 things to effectively choose an options contract. Price prediction. And again, this isn't a guess. You need to know what the price of the asset will be, or you need to have an idea of what the price of the asset will be in future, based on the data that you have available. Time prediction. You need to have an idea when the trade is going to pan out, when you might see a catalyst that changes the rate of increase or decrease, or shifts something. And then the premium, how much does the options contract cost? And that compared to some of these other factors. And then liquidity, how much buying or selling pressure is there? And time decay, how much time is left? How much is the value going to decrease over that time? And is it a good idea to buy this with the amount of time that it has left? Now, to be able to choose a good options contract, you're probably going to need to know other qualities of a good investment, but I don't really see those as specific to options. My knowledge of whether uranium or silver are good investments, and specifically this uranium or this silver company, it's mostly separate from my knowledge of which options fall within the parameters that I'm looking for. So that's what I want to focus on. You can options trade through a variety of brokers, and they all have costs and benefits. Things like Webull and Robinhood, they're free, they're straightforward, simple, and they typically harvest your trading data to help them make money. There's other brokerages where they charge a commission, and it's more private, and you generally have access to a lot more data. I typically only deal with purchasing puts and calls with money that's already in my account. No margin, no selling of options. Those types of methods exceed the risk profile that I'm looking for in investing. So I only want to use the lower risk type of tools, especially since we're in a high risk type of vehicle. So I use the options to get ahead of profitable trends. If I see a trend building, I'll secure a cheap option to track that trend, essentially. Capture the upward value or downward value. With all that sort of summarized, more specifically, price predictions are made using analysis of past price fluctuations, either in the stock that I'm currently looking at or one that has experienced a similar scenario. Timing predictions are made by analyzing the indicators relating to trends and specific insights, coming to conclusions about when the general market, when the public will be notified of the value that I see. And those are basically just catalysts to move the price in one way or another. There may be positive catalysts, there may be negative catalysts, they may be happening at the same time. It's just analyzing those to see what might cause it to go up or down. The premium is compared to the price prediction and the time left to determine whether it's too expensive. Basically, how far will it reasonably go? How much time do I have for it to get there? Does this price justify the level of risk? And liquidity gives an indication of how much buying or selling might occur when you need to sell the option. If there isn't much now, or hasn't been much in the past, it might be difficult to sell a lot of options when the price reaches the right point. So even if you got them at a good price, you may not be able to sell them all. And time decay is one of those factors that's fairly subjective. Every option has a set amount of time, but we have to assess for ourselves the sort of likelihood that a catalyst is going to occur in that time frame, and what the weight of the catalyst might be for the trend, and how that might affect our options. And there's a lot more that you can dig into, but those are the key elements of options trading that I assess when making trades. If you'd like to learn more, feel free to drop into the Trader's Journey Discord. Every now and then I'll pop in there and do a trading session. I'm probably going to do a workshop at some point, but feel free to pop in and hang out. I'm more than willing to share what I know and help you guys get set up. None of this is financial advice. Always do your own research, consult a financial advisor, but take advantage of some of the opportunities that are available to you, whether it's in options trading or something else. It's worth doing the research. Every day there's more that's happening that worries me. And if you haven't yet started preparing your family, now would be the time. There's no time like the present to get started. just a little bit here, a little bit there, something that protects you in the event that things get really bad. You know, what if the dollar loses half its value? What if energy prices skyrocket? What if food prices skyrocket? What if the only assets you have plummet in value? Whether that be your house or your crypto or whatever else it might be. You know, consider what would happen if the most valuable things you have lost a good portion of their value. And then consider what you could do to protect yourself from that. And just find a very effective way to protect yourself and start doing a little bit at a time. Thank you guys. Thank you guys so much for watching. I really appreciate your viewership, and stay safe out there. I'm gonna have more for you soon. Oh, and for those of you interested, we're going to be organizing a small group in Discord, essentially working on refining our skills through very focused, very frequent brainstorming sessions to keep us on track for accomplishing goals. Should be interesting. I'll let you guys know how it turns out. If any of you are around when this comes out, maybe pop by and hit me up. Hope you have a great rest of your week. I'll see you guys next time.